What's up, everybody? Welcome back to the channel. My name is Nick. I talk all about trading and investing, and today we are talking about gold. We're going to talk about a full technical breakdown of where I think the gold market may be headed, and I'm going to talk about a trade that was actually taken inside of the A1 trading community, not by myself, unfortunately, but it was a really good trade, and we're going to see if we can re-engineer why the trade was taken and kind of break it down so that hopefully we can look for more setups like this in the future. So stay tuned. Let's get into it right now. Hey guys, welcome back. If you're new here, make sure to subscribe to the channel for free content in the Forex and stock market world. If you're interested in this stuff and you want to learn more, there's completely free material all over my channel. We've got playlist section you can check out, all sorts of stuff. Got to get that in there before we continue with the video, because today we're talking about gold and I want to get into the technical breakdown and some of the big stuff that I see here going on with gold. Now, big picture stuff, we're in an uptrend here and we actually just re-tagged one of the most interesting points on the chart in my opinion, which is going to be this 200 period simple moving average. You can see it's this big red line that goes across the screen. And why is this interesting? Why is this important? Well, the 200 period moving average is not necessarily like anything fancy or magical to it, but it's more so that a lot of longer term traders keep the 200 period moving average on their chart. And that is simply because the 200 period is a lagging, it's kind of a slow indicator on purpose. A lot of people say, oh, moving averages are just lagging indicators, and that they are. However, there is some information that we can gather from the historical trend in a market. And when you have something like gold, which has just been trending up and up and up, you can see there's times where we change directions and it may be lagging, but it actually follows through and we can catch some momentum, some longer term momentum just by trading in the direction of the 200 period moving average. Now that by itself is not going to be some sort of magical entry system. It's not going to make you $1 zillion just buying, just because it broke. You might have to employ a little bit more to that and, figure out more strategy behind it. But the simple principle for me of going in the direction of the 200-day moving average is significant because we have long-term trend behind us in our favor. And so that can be a powerful resource. So we've actually been above the 200 period moving average, believe it or not, for most of 2020, if not almost all of it. You can see here's 2020 starts right here. Right? And all of this time, we've only dipped underneath the 200 period moving average twice. Once in March when we had the big pandemic move, and then we actually just retouched underneath the 200 period moving average. And the reason I bring this up is because look at what happened last time we tagged this 200 period moving average. We came down, we consolidated a bit, and then we exploded to the next push higher. Now, that could happen again. It's not necessarily going to happen again. Like, I'm not saying it's 100% or anything like that, but I'm saying from a probability standpoint, we got the trend long-term in our favor. Gold is a very bullish market right now, and we've just tagged a key level of demand, which is that 200 period moving average. And I want to point out the fact that we have really started to repeat what we've seen back here in March, which is a strong rally off of the lows there. And that is actually what Frank caught in his trade. We can pull it up here for a moment. You can see he basically jumped into the trade and trailed it for a while and caught a good bit of move. I think he's actually still in the trade. Yeah, he's still in the trade today, which is going well for him as well. Moved his stop this morning. So Frank trades a lot like me. He's another one of our traders inside of the A1 trading community. If you're not a member with us, basically we share all of our trades. There's a chat room for people. There's educational material. There's libraries of resources and all sorts of good stuff. We also do live webinars. And if you're interested in that, check it down below in the description. There is a promo code for you to check it out if you are interested. So with gold moving off of that 200 period average low, to me that's significant because it could be the next start to the next bullish rally here on gold. Now, I'm going to talk about some of the key things that I would be looking for in order for, to get long on a shorter term basis, because long term, I think that this is a decent buy zone personally. But I think shorter term for us traders who are trying to get in and get out on stuff like this, there may be some moves that could be of interest going into the remainder of 2020 and maybe even to 2021. If we start to move higher, the big thing here is we are technically in a downtrend here on this daily chart, depending on how you define it. But for me, we have seen some lower highs, we've seen some lower lows, and for the most part, we're still in a downward market. Now, the long term is up, but we're not, unless you're trying to hold a trade for like 6 months or longer. I personally would be looking for some of these other clues before trying to jump into a long trade shorter term. And here's what I'd be looking for. I'd love to see that this lower high series basically gets broken. So if we are actually able to break above and form a higher high, that to me could be a signal that, okay, the next trend is starting, and then looking for some sort of pullback, trying to get some value out of that pullback could be the best play in my opinion. So this is what I'm looking at. If we start to go back to the top of this channel, which it looks like we may, then if we can break out of that channel, right, this downward channel has a lot of strength right now. If we can break through that, that's where I'd be looking to try and re-enter on the pullback, trying to capture some of that longer term momentum as it really starts to kick off and break through bearish barriers. Okay, bearish barriers. That's an interesting way of putting it. I've never really thought of it that way, but it is kind of what it is, right? We've got like barriers here where the sellers are holding this push lower. Our goal here, if you're looking for a bullish setup, would be to, in respect to this long-term trend, would be to break through the highs here and look for a pullback. Now, what about the bearish case? Is there any bearishness here for gold going into 2021? Now, I will say, you guys have heard me for a while, if you've been watching the channel, I've been bearish on the US dollar in general. So what that means in a gold perspective is XAUUSD. What I'm saying is I think the US dollar is weak, which it has been, and I believe it will continue. We'll see if that happens. And then we have gold relatively going up. So when I'm looking at that, that's why partially I have a bullish bias here on gold. It's also in conjunction with the technicals and also in the favor of, you know, people just are pushing money into gold as kind of a safe haven during this uncertain time. So all of that to be said, basically, I'm looking for bullish setups more so than I am for bearish setups. However, there very well may be some bearish cases, but here, if price makes a move up to this point, this would not actually be, for me, an interesting sell point. I would not be interested in selling here because, again, that's kind of like the overall momentum is up and you're just trying to sell like as there's some question of if the uptrend is going to continue. I would say that for me, it's stay out of the way of the trend. I'd be more interested in selling if we start to see more confirmation that sellers are in control. For example, let's say that here, this level of resistance actually holds very strongly and we break that 200 period moving average much more convincingly. So what I mean by that is as price comes up here, let's say that we hold that zone and let's say that we break underneath that 200 period moving average, then to me it's sell time because then it's like, okay, we've actually changed our mind here. Gold is very much bearish and we're seeing that long-term uptrend really start to deteriorate. So a break underneath this 200 period moving average, it doesn't really matter to me as much as if it breaks and holds underneath for some period of time, right? Because back here, let's see if I can move my camera a little bit. Back here, right, we were underneath it for just a brief period of time before bulls basically just stepped back in and said, nope, we're going all the way higher. Now, that very well could happen again here, but if it does not, if we start to see a failure here, again, what I'm looking for is like breaking underneath and looking for continuation underneath there. And perhaps we'll revisit that if we start to see a break, and maybe I'll make another video. But for me, for the most part right now, it is buy setup time if we can get above some key resistance points. So if you're a bear, I guess, you know, this resistance point is from a technical perspective is not bad, but again, the overall uptrend to me is more of interest. So I'd be cautious with my sell trades and looking for buy trades if they make sense. Now, one more thing to add with that is sometimes traders make the mistake of, okay, oh, it looks really bullish. Things look really good. Let's say we do get this set up and then this starts to pull back. Some traders make the mistake of they get that setup, it looks really, really good, and then they just absolutely pig pile on that trade. They put all their money on one trade, or they go huge and they try and double their money or anything like that. I put something on my Instagram, maybe we'll pop it up here, but I said something along the lines of like it was an unpopular opinion. If you double your account in a day, you probably need to work on your risk management because your risk management is probably whack. So if you're doubling accounts in a day, that means that you took a massive amount of risk to try and do that. So to me, that's something that new traders make the mistake all the time. And to me, that's like one of the biggest sins of trading, if you will, because it's so important not to act like that. So even if this trade sets up, the other thing to think about is, okay, well, what's my risk? It's never about what's my reward as much as it is as always about what's my risk. So in this case, if I were to take a trade like that, right? If we were to look for something like that, let's just say it's here, I would be trying to risk small. So I'm risking, depending on your account size, this is going to change for you. On a bigger account, like for me, I might be risking 0.5% or 1%, or maybe 2% if I was very, very, confident, something like that. That's like the highest I would try and risk on one of these trades. And then on the flip side, the reward could be really nice. We could see a return back to the highs. That gives you something like a 2-to-1, if not more than a 2-to-1, which is not bad at all. So this is kind of how I approach a trade, how I look at it. This is a longer term outlook. This is much more of a swing trade than any sort of day trade. Maybe in another video, we'll take a look at some shorter term charts if that's something you're interested in. But again, guys, join us in the community if you have not already. Come give us a try, see if it's worth it to you. It's only like $50 to try it out for a month, and you get all sorts of content in there that should be really helpful to you. So check us out, see if it's interest for you. Thank you so much for watching. I hope you have a great rest of your day, and we'll see you back in the next video.